Hello and welcome to this new video. Today we'll be learning about ETFs. So basically what is ETF, what are the benefits of it, how you can invest in ETF, and what are the different types of ETFs available in the market. ETFs are called as exchange traded funds, right? So that is the full form. So basically, to make you understand, have you ever wondered that how can I buy index itself? Like if you want to buy Nifty 50 or Sensex or Nifty IT or Nifty Metal, right? So you don't want to go to a specific stock specific, but you want to buy a particular index or a particular index of a sector, right? So that's where ETFs come handy, right? So again, and ETFs are also kind of funds, but you can compare it to a mutual fund, but the only difference is that these can be traded directly in the stock exchange like a normal stock. Like you can buy it at any time and you can sell it at any time. So basically it behaves like a normal stocks, but these are actually funds which tracks. The main thing is that it tracks a particular index, right? Now it could be anything. It could be Nifty 50, it could be Sensex, it could be a particular sector like IT or bank or metal, right? Or PSU banks, in that way. So you have all these sectors ETF. And suppose if you want to invest in any particular sector, right, which you feel that it's good and you want to buy the whole sector, you can do it through ETFs, right? So now talking about the benefits, right? So the benefits of ETF is, like, you can directly, as I mentioned, right, the most important thing is that you can directly invest into index, right? Index or a particular sector. So you can buy the index itself or the sector itself. So your margin of risk gets reduced, rather than betting on a particular stock. You are betting, or you are going forward with a particular index or a sector which you feel can yeah. So this gives an option of buying directly the index, right? Second thing is, you can directly buy or sell directly like a stock. So it's not like a mutual fund where the transactions happen at the end of the day or a particular day, or you even when you're selling it, you have to wait for few days to credit back. It properly behaves like a stock, like a normal stock, how you can buy or sell, right? And again the third important point is to mitigate the risk. The risk involved in this is less, as you are investing in a particular index or a sector. So now the question is, how do you buy these? So as I mentioned earlier, these are treated as a normal stocks. So you can just go to your brokerage account, right? It could be like Zerodha or Upstocks, right? And it could be anything, and in that you just need to simply type the ETF name, and it will be coming, and then you can just click on the buy. And if you want to sell it in a normal way, how you do a particular stock, you can. So now we will be talking about the most important things, that what are the different types of ETFs available, right, in the market. So basically, again, as I said, it tracks index plus sectors. So I'll just start with the most common ones. There are a lot of options available, and I'll also tell you how to find out which one to buy. You cannot just simply go and buy, because there are some key parameters which you need to have, which will help you in identifying good ETFs. But let's first understand what are the different types. So as I mentioned, right, Nifty 50 is there, right? So there are ETFs which will track this. So basically they will track this. Then there is Bank Nifty, right? it will it will track these ETFs will track bank nifty. Similarly, there is like nifty IT, right? And similarly you have IT PSUs, you have, then you have metal, right? So now in this, like in nifty 50, I can give you some examples, like nifty bees is there. So this is the ETF name, Nifty Bees. This is from a Nippon Asset, manages this. Again, in Bank Nifty, they only have it and they call it as Bank Bees, right? And again in IT, they have it like IT Bees. So this is again one particular, company which I am given an example. Again, these have high liquidity. I'll be talking about what are the different factors. So basically these are like, suppose Nifty Bees will track Nifty 50, Bank Bees will track Bank Nifty, and IT Bees will track Nifty IT. So similarly, and how the particular index or the sector is behaving, these ETFs will also behave in the same way, more or less in the same way. So now I will be talking about the three important factors that you have to see in any ETF. So now the three important factors that we'll look into is, the first one is liquidity. I'll explain all the terms. Then second term is tracking error, and the third one is expense ratio. Now, what is liquidity? And we'll understand all these terms. So, liquidity is basically, it tells about the ETF, that how much liquidity is there, basically how much buyers and sellers are available, right? So now you need to select a stock where there is liquidity or where there is buyers and sellers. Suppose if this is less and the liquidity is less, you might buy it, but when you are trying to sell it, you will not get any buyers. Or similarly, when you are trying to buy it, there are no sellers available. So you need to always select a ETF which has a high number of liquidity. Okay, now coming to tracking error. So as I mentioned, all these ETFs, they tend to track a particular index, right? Now this is the most important function of a ETF. So the tracking error should be less. It means it means that, suppose if bank nifty is, moves 1% in a day, so this ETF also moves by 1%, or at least nearby to 1%, right? So the less the tracking error, the better is the ETF. And now let's talk about the expense ratio. So expense ratio is nothing but, again, it is a nominal fee which is charged by the company or the AUM who is managing that portfolio. Again, as I mentioned, these are like funds, right? But the benefit is you can buy and sell anytime through your brokerage account, and it has no limitations like mutual funds, right? So that is a nominal fee which they charge. And again, the expense ratio which are less than 1 are considered good. So I'll just practically show you few examples as to how you need to select a particular ETF. So now I have opened a ticker tape where we'll analyze some of the ETF, and all the list of ETFs are available here, or you can also check in the NSE website. So we'll discuss. So here I have opened, if you see, Nippon ETF IT, right, which tracks. So see over here it is mentioned what it tracks. It tracks the Nifty IT, correct? And these are the different parameters which it is showing, and the graph it is showing. So if you see, currently it is quoting at 32.9 rupees, correct? And now I'll come in the important factors which I was talking about. So if you see, so see, the liquidity is good, right? It has a high liquidity. The AUM is also good. It's a big, maintaining a AUM. the expense ratio is also good, and the tracking error is also good. So this is one ETF which we can select, right? So now if you see, there are others as well, as I told you, right, that it's not only the Nippon who is providing, there are others as well, like ICICI Prudential, Kotak. So all these are again IT ETFs, and they all track the IT sector. Like suppose if you go to Kotak ETF, right, and check. So let the page open. Yeah. So see, it says that it is tracking the IT index, and here also see, here this is what I was talking about. See, it says medium liquidity, right? So we should avoid in the starting considering these ETFs, because ETFs is not yet very familiar in India. It's an outside concept, and slowly in India people are adopting it. So we should always go for high liquidity ETFs, right? So now I'll show you some other quick examples of ETF. So like suppose let's take an example which tracks, Nifty 50. So I'll just type that. Yeah. So here it is. So see, this tracks Nifty 50 here. It is mentioned. So Nifty, it tracks all the Nifty 50 companies, and this is maintained by Nippon Asset, right? And again, if we see here, it has a high liquidity. High liquidity, the expense ratio is also good, and the tracking error is also good, and it's currently quoting at 211 rupees with a very good AUM size, right? So basically this is how you need to analyze a particular ETF and then invest in that, right? So I hope you like this video. If yes, please press the like button and also subscribe to the channel for more such videos. Thank you for watching.